Hello and welcome back. This is our final lecture in the criminal chapter here, and we're going to look at money laundering and also just on the implications that might have for your professional ethics. So, money laundering then. The Proceeds of Crime Act deals with this, and there's 3 offences. We have an offence of money laundering, so this is where you actually commit the main offence, you go off and you launder money, and we'll look at what that might be in a moment. Failure to report suspicion of money laundering, and finally, tipping off. In addition to the Proceeds of Crime Act, there are also some regulations, and these place extra duties on certain professionals in order to help control money laundering, and we'll have a quick look at those as well. So, what is money laundering, first of all? Well, it's the process by which criminals try to hide their ill-gotten gains. So if you've made a lot of money, perhaps from people smuggling, if you suddenly start spending that, people will start to ask questions. So what do? You try to set up a legitimate business and you wash those funds, those ill-gotten gains, through that legitimate business, and people will just think your business is doing quite well. And once you've done that, you can spend that money as normal. It appears to have come from a legitimate source. Now, money laundering applies to basically trying to hide any proceeds of crime. Now, the obvious ones, we think about drug dealing, people trafficking, things like that. But don't forget, simple things like tax evasion, leaving a number off your tax return, can also amount to money laundering. So we need to be careful with that. Now, we've got some examples there of ways in which people might try to carry out money laundering. Buying very expensive goods. Buy yourself a really expensive car and then sell it on second hand. That way you can say, well, this money has come from the sale of my car. And people forget that, they should be asking, how did you originally buy that first car? It just sort of starts to disappear into ancient history. Overpaying tax is another one. Oh, I've had a little windfall, a tax repayment from HMRC. Again, people forget, how did you overpay in the first place? Cash businesses, they're very high risk here. Your local fish and chip shop, Indian takeaway is always a good one. Anything where there's a high volume of cash, pubs, even laundry businesses, why not? Anything where there's a lot of cash passing through the business, it's easier for criminals to hide their ill-gotten gains there. Another one that happens is casinos, and they're now brought into the scope of the money laundering regulations as well, because people might buy chips and then they might cash them in and pretend that these chips are the proceeds of their winning. I just struck lucky tonight. Actually, they didn't strike lucky. They've been building up those ill-gotten gains for some time. And another one, which is probably the one that's most likely to affect us in our professional capacity, depositing funds with a solicitor or an accountant. It always looks good, doesn't it? To try and make it look like you've put that money, passed it through a solicitor's client account. It looks legitimate. And you'll see that the regulations quite often apply to solicitors, estate agents, accountants, people who might have money deposited with them or might be involved in those high-value transactions. So let's look at the offences. It's gone over the page there. Okay, so 3 offences. The first one we said the main offence was money laundering. Hopefully you won't be committing this offence, but this is where you actually hide criminal property, or you help a criminal to hide his property. You provide him with advice about how to hide the fact that this is the proceeds of crime, how to legitimise his proceeds of crime. If you do that, you are committing the main offence and you'll get the main punishment, 14 years imprisonment or an unlimited fine. The next offence is probably more likely to apply to you, and this is where you've failed to report it. You have a legal obligation to make a report where you've come into contact with someone who appears to be laundering money. And if you're even suspicious, you ought to make a report. Now that's quite a hard one, isn't it? Because the legislation is there to stop you from turning a blind eye, pretending you hadn't noticed. If you have those suspicions, you have to report. And the report is made to the MLRO, the Money Laundering Reporting Officer in your firm, who's usually someone quite senior who's had extra training. And they will make a report to SOCA, the Serious Organised Crime Agency. Now, SOCA is in the process of being replaced, but for the purpose of your exam, it's still SOCA. Okay, so you report your knowledge or suspicion. If you don't do that, if you do turn a blind eye, you're looking at potentially 5 years in prison. So it's still quite a lot for just not shopping someone, but that's the rule. And note this point here. So the examiner can test you on this. The test is not, were you suspicious? It's, should you have been suspicious? Would a reasonable person have been suspicious? So you can't hide behind perhaps, the fact that you were a little bit slow on the uptake. If a reasonable person would have made a report, so should you. And that brings us to the third offence. This is tipping off. Again, this could apply to you in practice, because once you've made a report, you mustn't do anything that tips off or puts the suspect on notice that that's what you've done, because the first thing they're going to do is go away and destroy all the evidence. So you have to be very careful not to give the game away, and in practice that is really difficult. I know someone, for instance, who made a report during the course of her audit at a client. However, she couldn't go back to she couldn't just leave the client. She had to carry on and complete the whole audit because she couldn't tip the client off that a report had been made. So she had to go out to the client the following day, carry on business as usual, and wait to see what happened. Equally, if you make a report about a client and they keep phoning you up asking for advice, what do? It puts you in a very difficult position. But you have to keep coming up with excuses to delay the giving the advice to the client until you know you're safe. So, tipping off. The punishment there, 2 years imprisonment. Now, there is a defence to all these offences, which is basically reasonable excuse, and that's pretty narrowly interpreted. If you were, physically unable to make a report, the client locks you up or something like that, or if you're under the threat of physical violence. Okay, we're not talking about a threat of, well, we won't renew our contract with you, you'll lose a few profits next year. We're talking about something more severe than that. So he's going to break your legs if you make this report, something like that. Now, that's pretty rare. I have once had a client who chased a partner around the office with a knife, but I don't think that happens very often. So that physical violence defence, not that common. Now, we mentioned earlier that the Proceeds of Crime Act is supported by the money laundering regulations. Now, these regulations apply to all relevant persons. And the purpose of these regulations really is to make sure that everybody is aware of the money laundering rules, and to make sure that proper records are kept, that we enforce the rules and we keep details that will allow all those suspicious transactions to be reported. It means that if SOCA decide to investigate a particular client, there should be an audit trail. We should be able to find fairly easily what's been going on with this client. Again, if you don't comply with the regulations, it's a fine or 2 years imprisonment. So if your firm haven't asked you to complete the money laundering regulations, it's quite possible that the partners in your organisation could be responsible for breach of the money laundering regulations. So who is a relevant person? Who's covered by these regulations? We said it's anyone really who might come into contact with money launderers. So banks, people who lend money, accountants, legal professionals, estate agents, casinos. And remember, we talked about high-value transactions being a potential method of money laundering. So any transaction in cash over €15,000 is caught here. So if you're covered by the rules, what does it mean? Well, you must keep records, 5 years. You must train your staff. Most people will have done money laundering training in their office if they're handling money. It's usually a CD-ROM or probably a download now, and you sit at your desk and you complete some desk-based training. The company must take steps to enforce its rules. It's no good, like we said, with bribery. It's no good having policies in place if you don't actually enforce them and staff don't follow them. The other thing to think about is customer due diligence. And this used to be called, in the old days, Know Your Client. It's about forcing firms to do a bit of investigation before they undertake pieces of advisory work, before they accept a new client. You need to check that the client is who they say they are. You need to make sure that they are indeed legit. So we need to have a look at that. Now, this shouldn't be new. If you work in practice, you should be applying these rules every day. So hopefully this is just a quick recap. So when do you have to carry out customer due diligence? Well, whenever you take on a new client, when you establish a new relationship. If it's a one-off transaction, a new client wanders through the door, you have to check. If you have any suspicions at all, you'll need to revisit these rules and consider whether you need to make a report. And what do you need to do? You need to identify your customers. Check their identity. So how do you do that? Well, you might be looking at, say, a passport, a driving license, utility bills, things like that. Sometimes we used to use a search, a 192 search, to check the person's address on the government's database. Passports, driving licence, utility bills. I always think that's quite interesting, because if I were a criminal and I'd managed to launder lots of money, I would probably be able to get a fake utility bill as well. The other thing you have to do when you're doing these checks, it's not just the legal owner you need to look at. You need to go a bit deeper, find out who is the beneficial owner here, who's actually behind this transaction. Now, with, say, a company, that means that you could be looking at who has control of the business. You're not just looking at the company itself, you're looking at its shareholders, its main shareholders. You might be looking at creditors, you might be looking at non-executive directors and executive directors. So dig deeper, okay? And you want to find out a bit more about this business relationship. Why are they coming to you? What's actually going on? We used to have a questionnaire when I was in practice where we would try and identify the source of this person's wealth. You know, was it their own business that they were selling? Is it something they'd inherited? And we'd try and verify various details that way. Okay, so we know we've got the money laundering regulations and we've got the Criminal Act. There is a problem, isn't there? Because as a professional, you owe an overriding duty of confidentiality to your client. And yet the money laundering rules say you must make a disclosure if you're even suspicious that they're up to a criminal activity. So how do we reconcile that? Well, there's basically 3 rules to think about. The first one, your duty of confidentiality is specifically overridden where legislation says so. And the piece of legislation that you need to know about, of course, is the money laundering legislation. So that protects you from a breach of confidentiality. You are complying with your legal duty. Now, there's a second rule that you could think about, and this is legal professional privilege. Now, what this says is you don't have to make a disclosure because something is privileged. It's part of your intimate relationship with your client, and you don't have to disclose that despite any legislation that says otherwise. Now, legal professional privilege is very narrow. It only applies in respect of litigation. So if you've been asked to give evidence in a court case, then you should be protected by legal privilege. Okay, so perhaps a client is being sued for non-payment of tax, or perhaps you're providing forensic advice on his accounts, then those pieces of advice and the research in connection with that advice is covered by legal privilege. There is an exception there. It's limited to the scope of the legal case in question. If your client is actually asking further questions with a view to, hiding a bit more money or increasing his crimes, then you will have to disclose that. Okay. The third type of privilege that you may come in contact with is a wider general privilege. This is at common law. And this privilege is very narrow. It only applies to solicitors, not to accountants. And that legal case, Prudential, which is detailed below, that case went all the way to the Supreme Court. And accountants tried to argue that the documents giving tax advice to their clients were covered by general legal privilege. And the court said no, that privilege is only to apply to solicitors' advice. Okay, so you have your duty of confidentiality. Doesn't apply if you have a duty to disclose under the money laundering regulations. However, you can claim legal privilege if you are advising in respect of litigation. And there's a couple of examples here that might just explain that a bit more for you. So Rita, she works in the forensic department of her firm, and she's an expert witness, so she's involved with legal proceedings in a personal injury case. So during the course of an interview with the claimant, she's trying to work out what his lost earnings are, work out what his claim should be. And Bob says, well, actually, it's no good looking at my tax return. I haven't always been entirely honest there. Well, in this case, he's not carrying on with this offence. This is a historical offence. He's giving her information about a particular court case, and she is involved in that court case. Therefore, although it is a money laundering offence, failure to disclose his income, she doesn't have to disclose it because she's covered by legal privilege. So that's category 2 in our list above. Have a look at interactive question 28 and see how you get on. Now my answer to that is C. So in this case, Angela has noticed a problem. She can't understand a particular entry. She's also noticed that the managing director is somehow involved in this entry, and that he seems to be having rather a nice life. You know, he's bought a nice car, he's moved house. She can't understand how he's managed to afford to do that. That is enough to give Angela, reasonable suspicion. So she has grounds to make a report. She has to make that report. If she goes to the managing director and tells him that she's going to make the report or asks him further questions, she's in danger of tipping off. Therefore, she needs to go to the money laundering reporting officer, who we hope isn't actually also the managing director, and make her report. If she does nothing, then she'll be guilty of failure to report. Now, there's a final section here that just tries to bring together law and ethics. Now, you can see that this area can be really difficult, particularly that interaction between your legal obligations and your duty of confidentiality. If you do make a disclosure when you didn't need to, then you would still be exposed to a claim against you for breach of that duty of confidentiality. So you need to be careful. And there's some steps set out there. To be honest, they're mainly common sense. Check your understanding. Have you really got this right? Have you understood it properly? Consult with the right person. Now that's really important. I don't mean, chat with your friends over coffee, decide what to do. Find the right person in your organisation. It might initially be a line manager, but ultimately we're talking about your money laundering reporting officer. If you need help, there is some guidance on the ICAW website. They also have an advisory service, the ICA advisory service, which might be able to help you. You could also approach your own legal advisor, or if you're working for a big firm, you might have someone in-house. So be careful. Don't just assume that you need to make this disclosure and rush off. Make sure you check with the right people. You could get yourself into terrible trouble there. Okay, that's the end of the criminal chapter. I hope you found it interesting. I always find that chapter quite enlightening, and it's good to have an awareness of these criminal points as you move out into practice. You never know who you might come across in your future professional exploits. Have a go at some of the questions relating to chapter 10, see how you get on with those, and if you do need help, give your tutor or give me a call.